Hi everyone, this is Kathy Grosskurs with Bookkeeping Clean and Simple. In today's video, I'm going to talk about a question that a lot of small business owners have, especially when they're looking at their total income along with their gross profit. And the main question that a lot of them have is, where did my money go? Because a lot of them do not understand how to read a profit and loss and compare that with the cash that's actually in the bank. They see that they have this huge figure for total income, which right here totals a little over $152,000, and they also see that they have a gross profit of $139,442 here. So, and then when we switch over to the balance sheet, and let's do that real quick. And looking at our balance sheet, you can see based on the fact that from our profit and loss, we saw that we had over $100 and something thousand in revenues or income. But then we come to our balance sheet and we see that as far as cash in the bank, and we're not looking at any other assets at this point, we're looking at just cash in the bank. You can see that we have in our main checking account, which is the only cash account that we have in here, we only have a little over $2,300 in our account. Almost $2,400 in our checking account. So the question of where did my money go often comes up a lot. And I also see this in groups. So I want to try to address this kind of on a high level. I am going to put a link to a video below. Penny Lane Crull does a really good job of explaining how this ties into the statement of cash flows, which I will show you at some point. But basically, I want to talk about 3 things that's going to impact your being able to figure out at least where your money went. So with that, let's go ahead and switch gears here. So the first thing we want to talk about is where our money went. We've got to look at the total picture of the profit and loss, because the profit and loss, we need to understand the total income or even the gross profit is just part of the picture. So when we're talking about the profit and loss, we're talking about the equation of income minus cost of goods sold equals gross profit, and then from gross profit we minus our expenses, and then we also include other expense and other income, and then that brings us to our net income of $18,280.60. So going back to the top here and just going off the fact that our gross profit was $139,442 down to our net income figure of $18,280.60. Let's go back up to where we see our total expenses. Our total expenses were almost $130,000. So a big chunk of what we had to pay to generate that amount of income ended up taking a big chunk out of our revenues to bring our net income down to $18,280.60. And so I'm going to go ahead and switch back to the balance sheet real quick, because I do want to show you that when we get down here to the equity area, that net income shows up in our equity section. So when we're talking about the profit and loss statement in our total income and our gross profit, we also have to include all the expenses that we incurred for that revenue to be generated. And that's a big difference here between over $150,000 to $18,000. So that's the first thing that we have to consider. Now, the second thing we have to consider on the balance sheet side is paying down some of these other things that are not really expenses, but we may have notes receivables that we're paying down. We may have other loans that we're paying down. So as you can see on this particular balance sheet, we have a couple of liabilities here, such as the Chase Inc. credit card, which is showing at $10,000. We also have a line of credit that we're actually drawing from. If you compare it to last year's number, we are actually, and this is very interesting, we have a loan from shareholder from last year that was basically payback in full, so it's showing at 0, but we basically replaced that with the line of credit here. So any of our liabilities that we're currently either paying down or we're drawing from is going to make a difference in our cash ultimately. But as we're paying down debt, as we're paying down other liabilities, then that's going to make somewhat of a difference as well. And so let's move on to our third thing here. Now our third thing here is the equity section. If you're looking at the equity section, a lot of times when owners are either sole proprietors or they're set up in a way where they take draws instead of direct payments, then that will also make a difference in your cash balance. As you can see, we collected franchise fees from the franchise owners, but the owner in this case is transferring those out into his personal savings. So year to date, he has transferred out $396,388.94. This actually may be a cumulative total that's never been adjusted back into retained earnings. If that's the case, and that means we're in a negative retained earnings, and I don't even want to go into that. That's just a whole nother thing. But when we're talking, and then we've also see that owner's draws make a difference as well. So anytime you take money out of the business, then it shows up as a negative number. So that's going to affect our equity. So right now we're showing total equity of $1,544, give or take a few dollars here or there. So basically when we're looking at our total liabilities and equity altogether, we're looking at basically our assets equal liabilities plus owner's equity. But the important number to remember is when we go back up here to the top, and we're looking at this cash number, because this cash number right here basically means that this is all we have. If we default on a loan or something like that, we're going to be in a world of hurt unless we can convert some of these other assets into liquid cash, which that's a whole nother thing to talk about. So I got one more thing I want to show you before we end this video. Okay, so this is the final piece of the puzzle, and the statement of cash flows kind of ties everything together. It kind of basically takes your net income, which we saw on the profit and loss, and then reconciles that down to what we have in the bank at the end of the period. And this cash at the end of the period, since basically that's all the cash that we have is from that one checking account, this actually ties into our last bank statement, which I'm not going to put on here for various reasons. Like I said, Penny Lane Crull does a very good job of explaining how all this works together. So I'm not going to attempt to do that. But once you learn how to read the statement of cash flows, you can see where this net income actually gets adjusted down to reconcile with this cash at the end of the period. So anyway, That's basically all I have for y'all today. I hope this helps you somewhat. Do watch that video that I put in the links in the comments, because I think you'll find that will really help finish everything off for you. Anyway, y'all have a wonderful day. Take care, and we will see you very soon. Thank you for watching. I would love it if you would subscribe to my channel and share it with others. My goal is to publish at least one new video per week on QuickBooks desktop or online topics, the occasional motivational video, and a few surprises thrown in here and there. I would love to talk to you about how to help you optimize your knowledge and usage of QuickBooks desktop or online. My Calendly link is in the slide. Please use that to reach out to me to schedule a free 45-minute initial consult. I would love to talk to you about your QuickBooks desktop or online training needs. Again, have a wonderful day, and until next time, we'll see you soon. Take care.